Hello, guys. How are you doing this morning? I'm glad you tuned into the show. Now, listen, today is Thursday, November 15th, 2018. Big welcome to the show. We're going to get right into it, and we're going to open up the charts and take a look at what's going on right now. So the first thing we want to take a look at is cryptocurrency, which took a big fall, It fell under levels of support. It fell down below $6,000, and it has not recovered today. It's at 53.8337 at Bitstamp as we speak, looking at Bitcoin Wisdom. And we can see the fall last night. It was running roughly around 50. Well, no, that's we have to go back. Let's go back to the 30-minute here. We can see the fall. It was up in the 6,000s. It's dropped about $1,000, and looking on this chart, we can see it's just it's still in the process of falling. If we're looking at this chart right here, and a rather steep decline in the price, lost $1,000 off. Anyway, this isn't the real important Bitcoin pricing right now. I don't see this as being real important because Bitcoin can bounce up or down $1,000 in a day, and it's no real big deal. But here's the thing. What's going to be a big deal is when the big crisis starts and gets underway, what direction is Bitcoin moving during the big crisis? Now, the more it moves down right now, right, the lower it gets right now, the more than likely the answer to that question, which direction will Bitcoin be going when the big crisis hits, is up. If Bitcoin does all of its down maneuvers right now, if it spends itself and blows all of its downward maneuvers and hits rock bottom and starts to creep back up when the big crisis hits, that's important. Which direction will it be moving when the big crisis hits? And the big crisis hasn't quite hit yet. Capital is starting to move around in the system. Let's take a look at the silver price today. Silver, has been responding to what's going on in the financial system. And we hit lows, awful bad lows. Right in here in this dip, we went all the way down to under 1390, 1380 something right here on this dip. But we've recovered a little bit since then, and now we're back up to $14.15. But it's on its way down right now at this moment while we speak. Let's take a look at the gold price. We're looking at $1,214. Now, we were under $1,200. We were all the way down to about 96 or something like that. When it dipped here. But now we're back up. We're back up to $1,214, which feels better than where we were. Okay, so let's take a look at cryptocurrency market capitalizations just for a second. It was $219 billion about 4 or 5 days ago. Now it's $179 billion. That's quite a severe loss in market capital. Bitcoin dominance at 53.1%, and we can see all these coins are in the red. So cryptocurrencies investors right now are caught in like a malaise, and everybody is like getting tired of this stuff, and they don't want to hear anything more about it. That's all going to change in the future. Let's take a look at the Dow Jones Industrial Average right now, and we start in the morning here with it down 110 points on the day. Now, I'm going to tell you why I pulled up this particular chart, which is the max chart. It goes back all the way back to like 1987. It's a long-term chart. For a couple reasons why I've pulled this chart up is, number one, the moving average. We're toying with the moving average right now. We're toying with going below the moving averages on the stock market, which is this purple line right here. I'll highlight it there. I highlighted it. That's the moving averages. And also another thing that's going on here right now with the market is This little turn down we're having in the market, the Keynesians, the academics who actually run this system within the Federal Reserve, they took a look. They look at this chart and they take a look at all these people out here who are saying there's a market crash coming. And they take one look at this chart and they say, what crash? We don't see a crash. All we see is up, 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 up. Look at this chart, because they're used to, all they're used to is not seeing the real economy, but just seeing charts like their Phillips curve charts, And then they take a look at this chart here, which just shows the market going up since the 1980s. And they say, what? We don't see any crash. Where's the crash? They say, we see a little crash here in 2008, but they say, other than that, we don't see any crash. We see a little down, and really, looking at a chart, they're pretty much correct. There is no crash. It hasn't really happened yet, But what I'm expecting in the very near future is something that looks like this 2008, except up here near the top, It's going to look like this right here, what happened in 2008. It's going to look like that, except it's going to be up here. And so where would that take us? If we get something that looks like that, looks like the crash of 2008, right up here, well, let's just pretend here. We could take it down, and what we're looking at is probably around maybe 12,000 on the Dow. If we get a crash, similar power, similar energy, it would take us down where these crosshairs here are, right here. And what we'd be looking at is down where these hairs are. Say there's a dip, so we're looking at about maybe 15,000. I don't know, 15, 14,000 if we get a similar crash. That's kind of what I'm expecting, and it will go under 20,000 at a certain point. Now there's a line for 20,000. When it goes under that line for 20,000, that's when I'm expecting them to really start to get nervous, and even the Fed then at that point. Even these academics will start to get shook up when it goes under 20,000. And that's when they'll be starting to talk, we got to do something. So that's what we're waiting for to happen. Let's take a look at the price of oil. Now, this price is scary. What's been going on with oil is scary, but, there's one of the factors that's having an effect on the price of oil is the fact that they realize that a global slowdown is coming. They call it a global slowdown or a recession, right? And they realize that the world's not going to use quite as much oil as it's using now. But we've got it being pumped out from many different sources. Not just the Saudis are pumping oil as fast as they can, but American wells are pumping oil out, and it's creating a little bit of a glut of oil. So this oil price could actually drop a little bit more. It's still up around $56.20. You got to remember, it went down to $29 last time we had a big glut of oil on the market. Maybe it's not quite as big a glut of oil this time, but still, this oil price just as easily could go up some too. But we got to keep a close eye on this oil price because oil is very important to the system. This is an oil-based economy. Let's take a look at bonds and rates this morning and see what they're doing. What we're looking at is really the bond yields are really starting to fall right now. Capital's starting to move within the system and move quickly within the system. And this is another sign that we're getting close to something big, the fact that capital's starting to take flight within the system. And the capital has been, a lot of it's been running in here to these bonds. And look at how it's driven these bond yields down. The U.S. 10 years down now to today to 3.09. So it's starting to take the energy out of the bond yields. So we're probably going to get we could have a little recovery in the market, a little turnaround in the market because these bond yields have fell back some. But that'll only be until the bond yields creep back up again. And they're going to, because let's take a look at the charts here. Do some little bit of charting analysis on the U.S. 10-year. What we'll take a look at is the overall picture. We'll do like the Fed does. They take a look more at the overall picture rather than looking at the charts in a macro way. They look at them in a more of an overall method. So what we'll do is we'll go to like, let's say 5-year here. And we can see the bottom down here on the in the last 5 years. The bottom on the U.S. 10-year was down here like 1.39, 1.4, right? And we can see ever since then, just steadily charting upwards, all the way up right now to where it is at 3.09. We don't see any slump. We just see a continual upwards trend. Ever since July, it began in July of 2016, this upwards trend, and it's not stopped. It's just continued the whole way, trending upwards until where it is now. It's not going to stop. It's going to continue to trend upwards. We've seen this change in direction. I mean, it was slumping downwards all the way from 2014 until July of 2016. Anyway, and now it's been sloping upwards, and it's going to continue. You know, this trend in motion is going to continue, and so we're not going to stay here around where we're at right now, around 3.09 for very long. We're going to exceed 3.25 pretty soon in the very near future with this trending upwards. Probably is not going to take more than a couple months, 2 or 3 months, for it to trend upwards past 3.25. And when it does, that's when we're going to see some major problems, you know. Well, capital's already starting to move within the system, which is a bad sign that something evil this way comes. Let's take a look at the U.S. dollar index now. What we're looking at is 97. Open the charts a little bit. 97.18. So it's staying up high, the U.S. dollar index right now. So listen, this has been your look at the markets for this morning. Thank you guys for tuning in, and and you guys have a nice day today, and we'll catch you later. Bye-bye for now.